Morning, people. So I'm having a VIP one-on-one, and I just said I should shoot this quick video, share a few things, some of the things I can share, and the others that are very exclusive. You won't get to hear, but even from what I share, it's going to be an eye-opener. So I have a Monday morning VIP session. Lighting is poor, but it's deliberate. My VIP sessions are relatively discreet. Anyway, so a quick breakdown of what we will be learning in the VIP one-on-one. This is like my financial market mastery masterclass, and this is the course that demystifies the markets for you. There are basically three things that we focus on in our VIP one-on-ones. First thing being, we help you to understand the global markets. Most people don't understand the global economy. Most people don't know that all asset classes are related. Most people don't know how to identify those relationships and how those relationships reveal what is happening in the global economy. So the first component of our financial markets mastery masterclass is understanding the global economy. I show you all the asset classes that exist to a trader and how those asset classes are related, the nature of the relationships, and how to know what will happen in advance in the markets. This is not something many traders understand. So you see someone waking up in the morning and say, oh, I'm going to trade GBP USD today, and he doesn't even know why. Or I'm going to trade USD JPY. You don't just select asset classes. It is what is going on in the global economy that tells you which asset class to select, which asset class to trade. And there's a top-down analysis for that. And that's one of the things that we learn in the financial markets mastery masterclass. So when you say understanding the global economy, you are talking about understanding things like gold, precious metals, the role they play in the global economy, commodity currencies, the role they play in the global economy, regular currencies or non-commodity currencies, the role they play in the global economy, financing mechanism currencies. People don't know that these currency pairs were created with specific things in mind. So we look at market architecture to understand the global economy. So in less than 15 minutes, you know what's happening in the global economy. You know what's driving the global economy. At any point in time, guys, only 4 things drive the global economy. Only 4. Only 4. You won't get this anywhere. Trust me. It's not on Forex Factory. If you're going to get this, you have to travel abroad. My friend is laughing. You won't get, if you like Google it, you will not see it. If it was there, we would all be billionaires. Only 4 things drive the global economy, guys. I don't care what the news release is. I don't care whether it's employment figures. I don't care whether it's housing statistics. Only 4 things drive the global economy. Number one, global inflation. Global inflation. Global inflation. You see, because banks print money from central banks, which print money anyhow, inflation always exists. Because these guys keep printing more and more money, and the goods and services remain relatively the same. But the banks are printing more money faster than countries can produce more goods and services. So if the amount of money in circulation is more than the goods and services available, inflation is automatic. This is why inflation never ends, because central banks are printing money. End of story. They can call it whatever they want to call it. Quantitative easing, helicopter money, whatever phrase is simple. They are printing more paper money or creating more electronic money. So the global economy is affected by the rate of inflation in individual economies, and then globally. So we measure global inflation because this is what affects the global economy. And there are asset classes that tell you immediately what is happening with global inflation. I know some of you like reading it on Bloomberg, some of you like reading it on Thomson Reuters, some of you like, reading it on FX Squawk and finding out, guys, there are asset classes. Once you look at them, you will know what is happening with regard to global inflation. All right? Second thing that drives the global economy, interest rates. Interest rates. Interest rates is what the banks, the central banks, are willing to pay you for bringing your money into their economy. So on the one side, you are looking at how these central banks are printing money and devaluing their economy. On the other hand, you are looking at the incentive they are giving you to invest in their economy. That is simple logic. They are printing money because they have budget deficits. And because, it's politics. Every politician wants to do well, so they print money. Everybody has vested interest. And then the central bankers also have interest rates to give you an incentive to bring your own money into their country. Because see, if they are printing money, they can only print their own money. The Central Bank of Nigeria can only print naira. It can't print dollars. It can't print pound sterling. You see that now. So there's a problem. So after they print more of their own money, they have to give you an incentive to bring your own money into their country for trade to happen. Is this making sense, guys? So the second thing that drives the global economy is global interest rates. And there are asset classes that you look at that will tell you what's happening with interest rates. Guys, this here is a master class. You won't get it anywhere. There are asset classes that tell you. So once you understand this in your mind, you know what is driving the global economy. Things like mortgage, employment, unemployment, quality of wages, GDP, those are just effects of central banks printing more money or reducing money supply, and then foreign investors bringing money into a country because of their confidence in that country. Yeah? So the first is global inflation. The second is global interest rates. The third is what I call dollar aversion or FX rotation. Dollar aversion. What do I mean by dollar aversion? Dollar aversion simply means, right? Don't worry, this video will not be more than 10 minutes. Dollar aversion simply means that somewhere in the history of global economics, right? Bretton Woods, World War I, World War II, America was the only country that didn't get involved in the war because America was profiting from the war, right? All other nations were at war, and America was producing the arms and the food and the ammunition that all other countries were using, plus or minus, to fight the wars. That's why Americans think war is good for their economy. No, war is not good for their economy. War was good for their economy then because they were the only ones not fighting. And their leaders understood it, right? I'm just giving you a historical background. So, after all the wars, World War I, World War II, only America was in pretty good shape. And America made other countries to adopt the dollar as their primary means of doing trade because they were the only ones in a good situation. And they pegged the dollar to the gold standard. And somewhere along the line, I think it was Nixon that took the dollar off the gold standard. But historically speaking, global economy, global trade is funded in dollars, right? And then also petrodollars, OPEC, that's a story for another day. So over time, every day, right, central bankers either have a desire to get the dollar or a desire to dump the dollar. Dollar aversion will determine what will happen in the global economy. The degree to which global investors want the dollar. Now, if they don't want the dollar, you've heard them say dollar is king. That means there's another currency that they want. What currency is that? You need to find a way of identifying when the dollar is not king, which currency is now running the economy for that day, or for that week, or for that month. So that's why I call it dollar aversion or FX rotation. And there are assets you look at that tell you whether dollar aversion or FX rotation is what is driving the markets for that day. And then the last thing that drives the global economy and the global markets is what we call safe haven status. Risk on, risk off. In times of political uncertainty or geoeconomic uncertainty, right, investors reduce their risk And when there is economic stability, investors increase their risk exposure. We call this risk on, risk off. You have to find a way of identifying what is the safe haven asset class for that period of time. Traditionally, it is gold and some other currencies, but things are changing. Cryptos have come into the space. So 4 things drive the global economy. Number 1, global inflation. Number 2, global interest rates. Number 3, dollar aversion or FX rotation. And number 4, safe haven status. Okay? If this is all you get, guys, identify the asset classes that measure this thing. They are right there in your market watch. All those asset classes. All right? So at this point, I'll put it off and I'll show my clients all those asset classes, the relationships they have, how to know what's going to happen, and how to profit from it. Okay? If you want to enroll for my online course, send me a DM. It starts at I have a 50K course, I have a 150K course. If you want to do my one-on-one physical masterclass, it's very expensive, guys. Not less than 6,000 USD. Yep. Because what I tell you will change your finances forever. That's just it. Okay? I'm having a one-on-one, or rather a physical class later this month in Lagos, Eco Atlantic. Yeah, I'll be coming into Lagos. I don't live in Lagos. I'll be coming into Lagos for that training, 3-day boot camp. So send me a DM if you qualify. All right, let's make money this year. Cheers. I'm putting this video down shortly. Okay, there's too much gold in there, and I don't want someone online saying, "Oh, la 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 la." No, this is real, guys. All right, so send me a DM if you qualify to work with me, and we'll take it from there and see. Cheers. God bless.